again to talk about exactly that. Ajoy, hi, great to have you on ET Now once again. Yet another great quarter overall for the jewelry business, and this time around with elevated gold levels. Ajoy, tell me how the consumer behavior has evolved in terms of grammage, ticket sizes, and of course, exchange-led purchases as well.
Yeah, thanks for having me here. It's a pleasure. Good morning. Yes, it's been a great quarter. Quarter three was highlighted with very high gold price increases, and we were unsure how customers will behave. But I believe because of gold prices not coming down, fence sitters came in, and there was a lot of fear of missing out, and therefore a lot of customers came into the market thanks to festival and then the wedding season thereafter. Most of the growth has come out of ticket size growth. In fact, buyers were flat. But I must say all the other divisions and other categories have also seen very healthy double-digit growth. So overall, it's been a broad-based growth for us across categories. So jewelry is done rather well, perhaps due to some amount of fear of missing out on the gold piece. I must also say that a lot of work went in by the operating teams to ensure flawless execution of all our plans, be it new collection launches, be it exchange, be it doing a lot of work on the ground in terms of exhibitions, high-value exhibitions, which continued well into the quarter after the festive season as well. And the same holds good for the watch division, eyewear division, emerging businesses. So all in all, a wonderful quarter to end with.
Indeed. But Ajoy, do you sense that this FOMO is going to continue to play out with gold prices being where they are right now?
See, it's very difficult to predict consumer behavior. As long as gold prices continue to rise up, I think customers tend to, feel this particular feeling of FOMO. But in month of February, we've seen some volatility in the prices. It's not just been a one-way upward movement, it's been ups and downs. So whenever those things happen, customers tend to wait and watch and see if they can time the market. But, it becomes very difficult to predict. I think if I look at the last several years, volatility has been a way of life within the quarter, within the month, and certainly across the year. But if secularly gold prices continue to tend upwards, customers tend to come in, especially when there are reasons to come in, whether it's festivals or it's weddings. Otherwise, they may hold on and see where it goes and then decide what to do.
Mr. Chawla, with regard to the trend, do you see the trend more with regard to gold brought in by customers and being made by you, or is it fresh purchases? It seems from your commentary, both on the con call as well as this morning, right now as we speak, that this is more fresh purchase led because there is a feeling of FOMO.
It's a mix of both, to be honest. We do believe that exchange gold is a great way for customers to get in and not feel the pinch. And therefore, we've kind of dialed that up in the last quarter, and we continue to dial it up in the current quarter because we believe that's a good way for customers to come into the market. We do see a benefit even during exchange purchases that there's an upsell. Customers may come in with a certain grammage of gold that they have, but they tend to buy much more than what they got in. It's also good both for the country, for the planet, and for the customer. So we believe exchange is a great way to go forward. We've seen a significant uptick on the contribution coming in from exchange in the last quarter, a 10 percentage points increase in contribution. Having said that, the FOMO factor plays out in general, not just for exchange customers or for anybody else. I think it plays out even for new customers. And certainly more than 50% of our business still comes from fresh purchases. So it is broad-based. I think that feeling is common to both.
So you're saying it's more gold price-led as opposed to volume-led, the spurt in the jewelry segment for you?
So in quarter three, for us, buyers is equal to volume, not grammage, because customers don't necessarily have a grammage in mind when they come. They come in with some budget. So as long as more customers come in for us, that means more volume. Having said that, in Q3, buyers were flat for us. In studded, the buyers were 3% growth. In gold, it was a negative. And in gold coin, gold jewelry, that is, it was a decline. And in gold coins, it was a growth in buyers as well as ticket size. So it played out differently in different segments. Overall, it was a flat buyer situation. In Carrot Lane, we grew about 4% in buyers, with the trends beginning to see upward in November and December on the back of some of the interventions that Carrot Lane did.
But grammage is also going down, is it? Because of high gold prices?
Yes. I mean, that is expected. For the industry, it has gone down. Between 8 to 10% is what I estimate. But World Gold Council numbers will be out and you can validate that. For us, it was about a 7% decline. I think for the industry, it was on 8%. But if I were to segregate that between gold jewelry and bullion, on gold jewelry, we were down about 12% on grammage, whereas the industry was possibly down about 24% on grammage for gold jewelry. There was a lot more swing towards bullion purchases for the rest of the industry. That's the numbers I have picked up from World Gold Council.
Mr. Chawla, talk to us about what happens to margins. If prices were to remain elevated, gold prices at the current levels or go higher, you've hinted at the fact that margins could actually come off. Talk to us about how much would those margins come off by? And is my understanding right that EBIT will largely remain the same? It's just the margin number because the ticket size goes up, your margins come off. Is that the right way to think of this? Give us a perspective.
So gross margins get impacted on account of 2 or 3 forces. When gold prices go up, firstly, how does the product mix change between gold jewelry, studded and gold coins? If gold coins goes up, typically that happens because of investment demand versus adornment demand. Then there the margins are lower relative to the other 2 categories. In studded, the margins are the highest, and in gold jewelry, it's in between gold coins and studded. Now, every time gold prices go up, the studded margins as a line item, as a percentage, tends to reduce because there is gold content even in studded, and there's a differential margin between the gold component and the diamond component in it. So I have said that earlier. Once gold prices go up substantially, there is an impact on the studded gross contribution. So besides product mix and the studded gross contribution, these are the 2 factors. When you put it together, it results in a gradual erosion in the gross contribution. If exchange goes up, there could be a plus minus because finally we are buying on spot from customers, and there is an additional cost of processing, exchange gold, etc. But most of it tends to get covered up by virtue of upsell and other mitigation factors that we put in place. At the EBIT level, we try to see that we sustain EBIT by leveraging operating leverage. But if there's a substantial increase in gross on gold prices, therefore there's a substantial impact on gross contribution, then EBIT can start trending downwards. So it's very difficult to predict because it takes time for us to also put in place all the mitigating factors. And if it is continuously rising, it runs into a challenge. At a company level, we also have other categories. Now, if watches and eyewear and fashion accessories and all the other categories tend to go up, there the gross margins are better. So even business mix comes into play. Having said that, Q3 saw a fantastic performance in jewelry. Therefore, it kind of dominated, and therefore the gross contribution of the overall company trended a little downwards because of the business mix also between these different categories.
Absolutely fair. So if margins were to trend downwards because of the reasons you've given, how much would that be? What would the jewelry EBIT margin look like? Because your guidance is 11.5%. how much would it go to at the very worst?
Difficult to give you a figure on this
Sure.
because we also are constantly estimating what can happen. So far, we've been around this 11% mark in quarter 3, despite what we have seen, thanks to operating leverage in some ways kicking in. In quarter 4, we will see where it goes because typically this is also a studded rich quarter. So we hope we are able to maintain it around that same level, but you cannot predict. How much more it can go down, I don't know. I think it's better to look at it from a year-to-date perspective. I would still say that we will strive our best to try and keep it around 11. But if gold prices continue to rise, there could be some erosion in that. I can't give you a figure on this. We'll have to play it quarter by quarter and come to you with whatever we think we can best do. We are working hard on introducing 14 karat studded jewelry and 18 karat plain jewelry, and in CaratLane and we are doing 9 karat jewelry to make things affordable for the customer. That may start benefiting us even from a gross margin perspective. But let's see how that plays out and how much we are able to shift the customer behavior towards that.
Understood. Have to talk to you about how the initial response to Beyond, your LGD offering, has been, and what are the expansion plans now thereof?
So Beyond has started well. It's been about 6 weeks since we opened our first store in Mumbai. The response has been fairly good as per our expectations. And it is the assumptions are playing out the way we thought it would. We will add in the first phase about 8 to 10 stores by June across Bombay, Delhi, and possibly Bangalore. After that, we'll take a pause and see how all the assumptions are playing out, how the unit economics are playing out, how the consumer behavior is playing out, and then take a view as to whether we need to course correct the strategy or things are working well and then we can roll out at a faster pace. But our first phase is to get to about 10 stores by June across these 3 cities, and then review from there on.
Mr. Chawla, on watches, analog has done very well for you. Talk to us about how some of the higher ticket size and premium segments, especially smartwatches, are doing, and give us the sense as to what's driving the demand in analog.
So I think analog is certainly at a category level benefiting from a share of wallet gain. I think post-COVID, things were not looking so clear, but in the last few years, we've seen analog watches come back strongly. At the same time, smartwatches, especially at the lower price ends, have begun to get commoditized. And I think customers have also lost interest in that category, certainly in the sub 2000, sub 3000 space. So for us, analog has done well, again, on the back of premiumization. We are seeing very good growth in the greater than 25,000 price bands. We are seeing good growth in the greater than 10,000. And even in Sonata and Fast Track, which are, let's say, much more in the volume space as opposed to brand Titan, we have seen good growth on the back of richer product mix. So even in that segment, in the below 10,000 rupees price band, both Fast Track and Sonata have gained substantially in ticket size on the back of very good offerings. On the volume side, we are seeing good uptick in volumes in Sonata and Fast Track, particularly on e-commerce channels, marketplace, as well as our brand.com. And that is something we are seeing. We are seeing a similar trend even in the fragrances side or bag side, where e-commerce is turning out to be a great channel for volume growth. But by and large, on analog, it's the premiumization story, which is cutting across price band. That's worked very well for us. Our new retail formats are doing very well. At the same time, in Smart, we have kind of reimagined our strategy, and we have consciously vacated price bands below 3,000, and we are focusing on design differentiated products which are doing very well. Though the overall, smartwatch has declined. Analog has grown 20%, smartwatch has declined substantially, but that's because it's a conscious strategy to vacate the sub 3,000 price band.
Interesting. So, where from here when it comes to store additions? How are you eyeing expansion? And are you looking at any more inorganic opportunities like a Damas?
So I'll take the last one first.
Sure.
I think we have a lot of work to do with Damas, and I think it's best to kind of execute well along with that team there. So right now, we would certainly not look at any inorganic, at least not in the near term. In terms of store expansions, we've added good stores, a good number of stores in the quarter, and we will continue to add because we see the India growth story as a great opportunity for us. Big towns, small towns, everywhere, high streets, malls. So that shall continue. But alongside adding new stores, we've been doing a lot of store transformations, be it in Tanishq, be it in iPlus, and that is the Titan iPlus stores, as well as in the Titan World and Helios chain. So we are actually renovating, expanding, and upping the luxury quotient of these stores. And that is also helping us in our premiumization journey as well as ticket size growth. So that piece is as important, if not more, than the net store additions that you see, because sometimes the square footage we add by renovating a store could be twice the normal size of a store that you might add.
What's the take with regard to fragrances, women's bags? How are those businesses really scaling? Give us a sense.
Emerging businesses have done well.
Yeah.
Overall, emerging businesses have grown in the double digits as well. Fragrances and bags have done particularly well. They've seen very heavy double-digit growths. Saris is been a little slower. I think that category has been a little slow in quarter 3. But overall, we are happy with the fact that emerging businesses are beginning to grow and growing healthy double digits at a broad-based level. As I said on perfumes, I talked about how e-commerce is fueling the growth of economy segment, but that is mainly for us fast-track perfumes. Whereas skin perfumes continue to dominate in department stores and in many of the Titan World stores, as well as some kiosks that are coming up. And on bags, we've added a few stores on Earth. I think by the time we end the quarter, we should be at about 17 odd stores. And we have aggressive plans to expand Earth stores as EBOs in the next year. I'm hoping that by the time we end next year, we should have 100 points of sale for Earth between EBOs, department stores, and some other formats that we are experimenting with.
Interesting. Lots to look forward to. That's all one can say. But Ajoy, great speaking with you. Thank you so much for your time today.
Thank you. Thank you so much for having me. Bye-bye.